Greetings. Welcome to my weekend market recap, 5th August 2023. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I develop. You may contact me using my email ID info@superiorprofit.co. I regularly share live market and stock analysis on my website superiorprofit.co, Twitter handle, maybe I should say X handle now, Superior Profit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. As I always say, if you want to know my directional preference of the market, then you may follow my trading ideas that I share on these channels always before knowing the results. And if you noticed my last 2 weeks of sharing, first I started sharing dividend yield, high dividend yield stocks as potential short put candidates. So if the market came down, one could get assigned on the stock and collect the dividend, holding it for longer term. That was appropriate for only the people who were willing to hold those high dividend yield stocks for the long run if required. One such stock that I shared was Footlocker FL. And afterwards, if you noticed, I shared only short ideas. Last couple of ideas were short ideas. I will review some of them if I have time during today's session. So I changed my view from bullish view to cautious view and then to bearish view. That is as of Friday's close. What about my weekend view? That is going to remain bearish and it became more bearish because of the indications I saw on the live Q systems as I will share in today's session. Before I start that, standard disclaimer, this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if option trading is suitable for you. When I decide my trades, I use the Q systems and only Q systems. Q has multiple components. All the components run on Metastock platform and the technical analysis component runs on TradeStation as well. The components that run on Metastock platform, they can be used in global markets, and the Q Elite analysis, technical analysis component on TradeStation can be used for the USA market only. That was the last slide. Let's use the live systems. First, a quick look at the global markets. Again, this instrument that we are seeing, All Ordinaries Australian Market Index, it is moving in a sideways range. The range is created by AutoSmart trendline resistance and support. Using the concept of box and bounce techniques in Q systems, we like to buy at the bottom, and when price came here, that is what I suggested. We like to short at the top. In the last market recap, that was my preferred direction, and now prices come down somewhat from the trend line resistance, enough to give us a profitable swing short trade. As of Friday's close, it is somewhat in the middle of the sideways range. That's the no trading area. I will avoid taking any trade in All Ordinaries now. Next, let's look at Japan's Topix Index. And as you know, though I am looking at global markets, the same exact technique can be used in USA market and vice versa. Topix index is very bullish, relatively speaking, of course. I'll qualify that statement why I added that relatively speaking. It is clearly in an uptrend in weekly and in an uptrend in daily as well. However, why I said relatively speaking is because I see some warning signals, and these warning signals, probably unique to Q systems, work almost always, as I say, and I hesitate to use the term always. So in webinars, YouTube live sessions, I say almost always. What is that? Warnings. Topix came to jump thrust high. That was an extremely high level that was not sustainable. And that jump thrust high happened when price was already at a very high level. So it was running up, galloping upwards, in fact, jumping upwards with high acceleration when price was already at price extreme high. And then came, in fact, this happened this week, then came big move down 3. And this is my hypothesis, and it works almost always. You try it out. I'll show some examples. Recently, I traded using this pattern. Big move down 3, parent of all bearish momentum signals. So my hypothesis is, who are the people who are selling at the very top of Topix? Not common retail traders, probably no retail trader, including myself. I don't short at the very top. I want to see some signal like this, footprints of very big players selling at the top, and then I change my stance to bearish stance, provided I have a proper Q short setup. And that is why I said that yes, it is bullish, but relatively speaking, when I see these alarming signals, I am not keen to buy in the Japanese market. Rather, I will look to short. But as of Friday's close, in fact, since the time we have big move down 3 for Q setup, I don't have any short signal because a trend line support is very near. If this trend line support is broken, which will mean that weekly trend line support is also broken, then I'll be happy to look for weak fundamental stocks in Japanese market for shorting. And this pattern is very useful. Recently, India and USA, some markets in USA, at least the tech stocks, some of the mega cap stocks, were at very high price level, and they displayed this exact same pattern, and I used the exact same pattern to take short trades. This works also at the bottom. If we have, instead of jump thrust high, jump thrust low at price extreme low, then comes big move up 3, almost always it leads to an up move. And if you look back, if you watch my past YouTube videos, then you would notice that I could catch Tesla at the very bottom using the same pattern at the lower end. And that is why I qualified my statement that yes, Topix is bullish, meaning it is in an uptrend. But if I use Q signals as I do, I'm not going to buy in Topix now. So no buying in Australian market, no buying in Japanese market. No shorting also. What about China CSI 300? Remember the Australian market? That was also in an identical sideways range created by these AutoSmart trend lines. And as I always say, in the sideways range at the bottom, look to buy, at the top, look to short. And what we also have at the top, we have the trend line resistances, and we have cluster of bearish indecisions. They almost always lead to a bearish setup. We don't have a bearish setup yet, and this cluster of bearish indecisions at the top, that is not a short signal in itself. So we get ready when we see cluster of bearish indecisions and wait for a bearish setup. We don't have that yet. On Monday, if price comes down, closes below previous day's close, which did not happen on Friday. Friday's candle shape is bearish, but it closed above Thursday's close, so that did not give us any bounce short setup. But if on Monday price can come down, close below Friday's close, then it will give a bounce short setup. You can see that it will also be coming down from weekly trend line resistance, and weekly has one bearish indecision. So I will be happy to look for shorting candidates in the Chinese market if it comes down on Monday. That is my preferred trading direction. Next, India's Nifty 50 index, and you can see the more you watch my analysis, it is very unambiguous. There is no two ways of looking at the charts using the indicators and colors. There is only one way to look at the charts and decide preferred trading direction. India's Nifty 50, it was one of the strongest, probably the strongest of all markets, all major markets. It is still remaining very strong. But now, watch how the Q signals are playing out. First, we had a cluster of bearish indecisions in weekly. And this week we have a bear release signal in weekly. However, we have indecision shape candle in weekly. So weekly is saying that don't go long, don't go short. What about daily? Notice again, the bearish headwind, the unique reversal signal came almost at the very top. And that is a reversal signal. When you looked at that, you could start to look for weak fundamental stocks that were giving short setups. And if you followed my Indian market analysis, stock analysis, you would notice that I had shared multiple shorting ideas from that time using the bearish headwind in the Nifty index. The Nifty itself did not give any short setup, but I could find shorting candidates in weak fundamental stocks. What about now? Now it is in a triangle pattern at the right edge. It is in the middle of the triangle pattern. So our technique, Q technique, is very consistent. Just like in Australian market, I will come to the same conclusion. It is in a no trading area and I will not take trades in either direction. I will wait for Nifty to break out to the upside or downside. Now, having said that, though I am saying that when I look at these indicators that I described so far, what did I describe? The indecision at the top, that is bearish, bear release in weekly, then bearish headwind in daily, and in a sideways move in daily, and we in fact have a bull release signal on Friday. All of those are saying that yes, it came down from the very peak as expected, and now it is sideways. I don't want to have any preferred trading direction, but there is some other signal, and that signal, that pattern works like almost, I'm hesitating to say almost always, and because of that, let me say that I have a bearish view on the market, and that pattern once again is jump thrust high at price extreme high. So already at very high price level, and it was galloping upwards with acceleration. Then all of a sudden came the parent of all bearish momentum. Some person sold very heavily at the very top, and clearly it's not a retail trader. Yes, using the bearish headwind, I could short some stocks, but my selling would not result in this big move down 3. Somebody sold very heavily, and I don't think they are done selling. Usually they will need more time to sell all their holdings, and that is why, though it is inside the triangle pattern, my view on the Indian market is bearish. I am expecting these trend line supports to be broken. Yes, they may find some support at the second trend line, they may find some support in the yellow direction line, but because of this extremely useful pattern, I am net short. In fact, I have only short positions in the Indian account, that is short for short-term trading, only short trades. And the trades I have taken, they don't have any trend line support nearby. So they are giving proper trade setup. So I explained, though in this case it is inside a triangle pattern, why I am holding bearish trades only in the Indian market. That is because of this pattern that has not failed me ever so far. Again, I am of course shorting stocks that are having weak fundamentals with proper short setup. Let me share one stock. I posted it on Twitter, or X you may say. Superior Profit is the X handle. Let's look at some recent posts on the Indian market. Some are on the USA market. The technique is same. I trade in both these markets actively. The technique is more important, not about the. Okay, there are many, as you can say, there are many Indian market ideas. Let's look at one of them. Let's look at Vale industrial stock. Again, focus on the technique, not necessarily on the ticker symbol. Vale, and while it is getting the chart ready, let me also calculate the fundamental scorecard of the stock using QVital. And this is the same approach I follow in every market. Look at the fundamentals, look at the technicals, look at the industry. I'm not going to recalculate the industry in QH because I am in a live webinar, but let's look at the technicals and fundamentals. What is the stock? Is it in an uptrend? Yes, it is clearly in an uptrend. BHEL, VEL, well known large manufacturing company, industrial stock. It's clearly in an uptrend in weekly, daily, both. And here is the unique thing about Q systems. If I did not use the Q systems, the 360 degree, I would not probably short this stock because it is in a clear uptrend. But I am seeing a cluster of bearish indecisions, then came bear release, then again bearish indecision, then came bearish flow, and it broke down below trend line support with a bearish shape candle on Friday. So on Friday, I took a short position in the stock. What kind of setup I have? I have a breakdown short setup at price extreme high and reversing. If you look at the price extreme band indicator, it is telling us it is a stock that is at price extreme high and reversing. On Friday, it broke down below trend line support with above average volume. What about its fundamentals? This stock is overvalued with negative earnings growth, with rapidly declining earnings growth. So both in terms of valuation as well as in terms of earnings growth, it is bearish. It's a 3-star shorting candidate, and it has retrieved 10 PR stocks. Give it a few more seconds. I want to explain the full technique. 60% of PR stocks are down. That means the industry in itself is also weak on Friday. So I found a stock that is at a very high price level with weak fundamentals, and that is giving a breakdown short setup at the very top. And this breakdown short setup, in general breakout short setup up or down, can come in a stock that is in an uptrend or downtrend or sideways moving, and this stock was in an uptrend. I have a low risk short setup and I took that. And I came to this stock is because in the USA market also there were several stocks at a very high price level. They were still in an uptrend, but I could short them. I will look at some of them. The technique is the same. The country can be different, the ticker can be different. Let's continue with a look at the global markets. Let's look at the last of the global markets we see, FTSE index, UK market. Interestingly, and I'm doing this live, I did not look at all these charts before the session. Live is better. I can demonstrate how quickly I can look at the chart and decide. Remember the Australian market, remember the Indian market. FTSE index is the same, moving inside a range created by trendline support resistance. At the bottom, we'd like to buy at the top, where interestingly we had this cluster of bearish indecision, then came bear release. We would like to short there, but now it is in the middle of the range. That's a no trading area. So I will not like to trade in the UK market now. So global markets are not giving any clear trade signal, and sometimes I look at the global index. I look at it every day, but I don't have time to share everything in the weekly market recaps. If I look at the custom built global market index, that is in fact still in an uptrend. It came down little bit from near jump thrust high at price extreme high, then came a pattern, and this came this week, big move down 3. Very important, very useful, aka very profitable pattern when we decide trading direction using this. This is telling me that it is much more likely to drop going forward than go up, because this pattern shows somebody, bigger people than me certainly, sold heavily, and I don't think they are done selling from only 1 days of selling. Market is overbought from several angles, and I think it will come down. So that is giving me an overall bearish view of the global markets. I explained the exact same pattern came in India, so I am overall bearish on the Indian market. And what about the USA market? Let's start with QQQ. Why don't I use, by the way, it opened the dollar index. So why don't we look at the dollar index? It's not UUP, not the ETF, dollar index. And this index can be tracked in the overnight market. If you are trading in the USA, that's overnight market. For Asia, in the morning session also, day session. This is always plotting if you are using real-time charts. Dollar index is in fact inside the similar triangle pattern that we saw in Australian market, we saw in Indian market, we saw in UK market. Dollar index is also there. If it breaks out, that may have some significant impact on the markets, not only USA market but other markets. If it breaks down, that will also have some major impact on those markets, USA as well as global market. You may keep an eye on that. Now let's look at QQQ. Why I am starting with QQQ, the Nasdaq ETF is because it gave the exact same pattern that I described earlier today, and I have described it earlier also. QQQ came to jump thrust high, price extreme high. So at already price extreme high level, it was jumping up with acceleration. Then all of a sudden came big move down 3. And exactly when this happened, not today, exactly when this happened, in that market recap, I explained that this has come. That also came with a bearish headwind. Isn't it uncanny? Bearish headwind in the weekly chart caught the very top, not near the very top. Sometimes it catches near the very top or bottom. Here it could catch near the bottom of this up move. And this week in the weekly candle caught the very top, and I am so used to these Q signals, you will be if you keep on using them over a period of time, that when the bearish headwind came, when this big move down 3 came at jump thrust high, price extreme high, if you now look back to my previous YouTube sessions, you will notice why. Now you can understand even more, because now price has moved forward, why I changed my trading ideas from bullish side to stocks with high dividends, and then eventually I changed my ideas to bearish side in this week. Now QQQ itself is inside a triangle pattern. Isn't it interesting how many instruments we are seeing are in a triangle pattern in different countries, different markets, even in dollar index. However, just like in case of Indian market, by the way, the Indian index Nifty 50 is looking very similar to QQQ. It has the exact same pattern that QQQ has, and just like in the case of Indian market, I said though it is inside a triangle pattern, my view is bearish because of this jump thrust high, price extreme high, big move down 3. For QQQ, I have the same view. And in fact, on Friday, I shorted QQQ using put options. I don't like to buy options except, and I say that publicly over and over again, when the instrument is at a very high level and I'm trying to short the top. You notice QQQ is not in a downtrend yet, but I use the intraday charts to short it, and I notice the trend line supports that are there in both weekly, daily for QQQ. So I did not hold on to all the positions, all the lots. I sold enough lots to get my money back. I'm holding the lots which are already paid for by the profit. And how is that possible? Because I had 50% profit in the put options in QQQ. So if you have 50% profit on the entry day, if you have 3 lots, for every 3 lots you sell 2 lots, you get your initial investment money back. So that is what I did. In fact, to be on the extra safe side, for every 4 lots, I closed 3 lots. For every 4 lots, I closed 3 lots. So the last remaining lot I am holding is at 50% profit and I got my money back. So that one, I will not lose in the trade as a whole, even if it comes to the trend line support and bounces, and I'm going to watch QQQ on real-time charts. Even for the remaining lots, I am certainly not going to let it turn into a loss. So that was a profitable trade, and I could decide to take an intraday short trade because of all these patterns that I observed beforehand. And then I was observing something on the real-time charts. Let's look at that. I was looking at the index breadth. Let me explain exactly why, how I shorted QQQ. Yes, I watched the jump thrust, big move down, price extreme high. I watched the weekly bearish headwind, but I also looked at the real-time charts. And now I'm using Q Elite, looking at the intraday breadth. And I'll explain some things using multiple Q systems. They are running on multiple monitors during market hours. On the left hand side is QQQ with the NASDAQ breadth, that is tick, advanced decline, up down volume. On the right is SPY. In fact, on my trading monitor, these are the future symbols, but during the webinar, I have a desktop setup with ETFs. For trading monitor, I have a different desktop setup that has the future symbols NQ and ES. They are equivalent except that the futures trade 24 hours, and therefore some additional pivot lines may be drawn on the future symbol. That's why I use the future symbol for actual trading. Why I am using the SPY and QQQ in webinar is because you can easily see from day to day how it is jumping up and down. On future symbol, because they're 24 hours, they will fill up the entire screen and you will not be able to see the jump down at open or jump up at open. That's why in webinars I'm using the ETFs, but in real life trading I use the future symbols. Okay, now let's see what we are seeing now, but more importantly what I was seeing live after the market open. And at the open I use 5-minute charts. Let's change to 5-minute charts. QQQ opened up, SPY opened up, and follow along because you may be able to trade the ETFs or futures or options on ETFs using the exact same technique with very precise entry and exit, always keeping focus on risk management. Now notice one thing, QQQ opened up, then went up further, then reversed. SPY opened up relative to previous day's close, went up, then declined. Where did it stop the up move? At the early range high. Where came in QQQ a bear release signal, and this drop was sharp. Now if you followed the media, I never trade based on media, but I have real-time access to all the news through Icon, so I keep an eye on that. All the media reports were positive because of Amazon results. Amazon went up by a very high percentage at the open. Apple came down but by a much smaller percentage. And the economic indicators that printed at 8:30 a.m. before the open were also positive. So market went up. Then QQQ reversed. Now with Amazon going up so much, one would not expect QQQ to reverse sharply after the open. But that was not all that I saw. What I saw was also Q edge, and I don't have that real-time snapshot saved, but let me explain. This is Q edge market breadth, one page chart, sector industry stock breadth signal. As of Friday's close, 5 sectors are open, 6 are down. Infotech is down, that is at the close. That is fine. At the close, it happened like that. I am not surprised. But what I noticed is at the open also on Friday, Infotech was down. In spite of almost all the mega cap stocks being up. And that also I kept an eye on. Let's look at the mega cap stocks. This is exactly how I am trading. To use the quote of Dr. Alexander Orvar, this is my trading room. Meta went up. Apple was the only stock that came down about 3% at the open. At the close, it was down by 4.7%, but at the open, about 3% down. Amazon hugely up by 10% or more, around 10% at the open. Google went up. Microsoft went up. Netflix was also around the open, a little bit around the open. This is the line I'm seeing, the pivot line. Open and previous day's close was around the same, but it was also up in the morning. Tesla up. QQQ was up initially, then it reversed. We saw that earlier. So when you looked at the mega caps in the morning, you would expect technology to be strong, in fact very strong. But if you did look at Q edge, and I did, this page is always on one of the monitors during trading hours, be it India market or USA market. Infotech as a sector was actually down in the morning. So when I saw that anomaly, I was happy to look for a low risk shorting opportunity. Now let's go back to the breadth chart. So QQQ came down. If you shorted QQQ using put options when it was breaking below the early range low By the time it came to the lower end, that option, I think I selected about, I don't remember exactly, maybe 2 or 3 weeks to expiry. That option had about 20 to 30% profit, let's say 25% profit. So when you have a naked put options trade with 25-30% profit in a hour or so, you or I will not, should not, and I don't let it turn into a loss. So when it went up, if you held on to that, it would go into a loss, but we would not do that following Q guidelines. If a options is having so much profit in a day and you have some reversal signal, there is no point letting it turn into a loss. So you would exit probably with small profit. You will not let it turn into a loss. Then it rallied. So I am looking at multiple things, and it's like coming into my trading room. I am looking at QQQ going up and displaying a bearish headwind. By that time it is midday, so let's change to 10 minutes chart. It displayed a cluster of bearish indecision at the top for QQQ. It displayed this tick bearish divergence. This is 100% real time tick bearish divergence, looking at the ticks and the price move. Then came a bear release signal, that is about Nasdaq advanced decline breadth, Nasdaq internal breadth. In SPY we have the similar tick divergence shown on these charts. On QLE, tick divergence along with a bearish headwind and a bearish indecision, then came a bear release signal. So these are about the Nasdaq and NYSE as a whole. I also keep an eye on the major indexes. In the afternoon session, 10 minutes chart, let's look at them. This is Russell 2000 internal health, this is Dow Jones Industrials, this is Nasdaq 100, this is S&P 500. We had cluster of bearish indecision in Russell 2000, then a bear release. We had a bearish headwind in Dow Jones Industrials, bearish indecision, flow change to bearish. We had cluster of bearish indecision in Nasdaq 100, followed by a bear release and a bearish momentum color. In S&P 500, we had a bearish headwind at the top with bearish indecision, then a bear release, momentum change to neutral, then immediately to red, and then here we came bearish flow. And while I am watching at these breadth signals in terms of major indexes and Nasdaq NYSE as a whole, I am also watching at Q edge. Infotech turned positive when the market rallied, but then it was turning negative again. So you would, and I did, short QQQ. I might not have been able to pick the very top. It's my night time also. I don't keep stuck with my computer. So you could actually short here at the very top. Why QQQ and not the others? Because Infotech as a sector showed something to us at the open, that some people were selling heavily with the positive news of Amazon earnings and with the positive economic news. But some people were selling tech stocks heavily at the very top, almost at the very top. And they may not be done with the selling. So when we had this unique, again, reversal signal at this top, it was clearly in an uptrend in the 10-minute chart across all the indexes. But we have this unique reversal signal. We would short right at the point it came inside early range, that is just below early range high. We would put stop just above the day's high. I didn't, I don't think I was so accurate. It's my night time, but in any case I might have shorted somewhere here, and by the close of the day I had 50% profit. I had booked some profit along the way. As I mentioned, for every 4 lots, I closed 3 lots. So somewhere along the way, when I saw I had enough profit, so if I closed 3 lots out of every 4 lots, I got my money back. I got my money back. And when I woke up in the morning, I saw the remaining lots have 50% profit. My money is back. So that is exactly why and how I shorted QQQ, not the other market ETFs. That is why I shorted using naked puts. And what are the things again I looked at? I looked at the NYSE NASDAQ internal health. I looked at major indexes internal health. I looked at the peculiar thing that Infotech was down as a sector in the morning, and it was one of the weakest sectors throughout the day. And looking back, I saw the pattern in QQQ of this pattern that hardly ever fails. Jump thrust high, price extreme high, then came big move down 3. So I was having a bearish view of QQQ. And I am still having a bearish view on QQQ. And QQQ is heavily influenced by mega caps. Let's look at the mega caps once again. This is the 10-minute charts of the mega caps. All of them except Apple went up in the morning. And Amazon kept on going up, up, up till it didn't. Then it reversed, in fact, closed below early range low. Volume picked up near the close. That is not unusual, quite usual. But the fact is that price closed below opening price, which was a huge gap up open. It also closed below early range low. So the support that early range low gives after a huge gap up, that is broken. So yes, it closed still very high, 8.2% higher than Thursday's close, but I am not able to be bullish based on this intraday chart. Google opened up, right? But then sold off, closed negative. Meta also opened up, sold off, closed negative. Microsoft opened up, sold off, closed slightly positive. Netflix closed slightly positive, is moving sideways in fact. Tesla opened up, sold off, closed hugely negative, more than 2%, and QQQ also opened up, sold off, closed negative. So overall the mega caps, yes, if we look at the daily charts, they will not be bearish, not all of them. Some I will have a bearish view. I tweeted about that stock, but not all of them will have bearish setup, but not on daily. But the intraday charts are not telling me to buy them on Monday. And because of that, the fact that mega caps have huge influence on QQQ, that is another reason I am having bearish view on QQQ, and I am holding some naked put lots on QQQ. They happen to have 50% profit. Well, what about SPY? And let me reiterate why I booked profit in many of my lots, bearish lots, put lots, is because of these trend line supports. I don't want to risk erosion of my profit. They work very well. And if option trades go against you, the profit can erode very fast, and I did not want to risk that. What about SPY? SPY. Once again, we see the unique features of Q systems. If we look at weekly, it was going straight up and it is still in an uptrend. However, now we see after a long time, this trend line support in weekly is actually broken with a bearish momentum candle. Backdrop is bearish. after a long time. The last bearish momentum candle was here sometime in March, and now we are in August. Now we have the bearish backdrop at the very top. It came with a bear release as well at price extreme high in weekly. In daily, we have that very useful signal again. Jump thrust high at price extreme high, came a big move down 3. So from here onwards, I am already having a bearish view on SPY. Yes, the trend line support is here in daily. That is also one reason I booked partial profit in my QQQ naked put lots. Am I thinking it will bounce from the trend line support that we have in SPY QQQ and make new high? No, because of this pattern, I am anticipating, but I am not going to trade based on my anticipation. I am using proper trade setup to take the actual trade, but I am not anticipating it is going to go higher. Rather, I am anticipating in case of SPY also, it will break down below support. What about DIA, industrials? This session is again like come into my trading room. Industrials were strong for a while, and interestingly, I watch many people's videos. When Dia was even here, I watched some people were selling buy industrials, buy industrials. Why will somebody buy at the very top? It still beats me. In Dia, my buy signal came here. I always like to buy at swing low, be it using the flow setup as was in this case, or be it a bounce setup, box setup, headwind setup. I like to buy at swing low. One exception is breakout, and I take breakouts only when the risk is narrow. But I saw people kept on telling buy at the very top because they were only looking at what happened earlier. They don't have probably the benefit of all these signals, including jump thrust. So it pulled back, but it is not giving me the signals like jump thrust high, price extreme high, big move down 3. It is not giving me that signal. And that is important to understand because that is also a part of my decision making why I shorted QQQ but not DIA. On Friday and at the close of the week, we have some interesting signals here that we did not have in SPY QQQ. We have a bearish reversal on Friday. We have a bearish reversal for the week also. So those themselves are good enough reason to look for short trades now. And the nearby trend line support is far away, unlike SPY QQQ. So we don't have jump thrust high, price extreme high, big move down 3, but we have these reversal signals in both weekly, daily, and trend line support far away. That is enough for me to turn bearish. Once again, DIA is not in a downtrend, and many traders only trade with the trend. That is fine. I also trade that. I have pullback setup, flow setup. Those are trend following setups. But I am equally comfortable taking reversal trades for different market conditions. Headwind like reversing market. The bullish headwind came near the very bottom here. Bullish headwind came near the very bottom here. That is an essential part of required part of headwind reversal trade setup. I am also very happy to take bounce setups at trend line support or box setups at sideways market. All those are reversal setups, and using the same logic, I am happy to look for short trades. Will I trade DIA? Not necessarily. I can look at the individual weak fundamental stocks to short. And the last market ETF is IWM small cap, and this is very interesting. Let's look at one chart I shared in the previous market recap. And if you are watching my YouTube sessions every week, I'll say it is important to see how the analysis is flowing from one week to next week. Firstly, is it consistent? It has to be consistent. And how is it working out? It does not have to work 100% of the time for us to make profit, for me to make profit from the market, or you to make, but it has to work more often than not at least. So let's look at something that I explicitly stated in the last market recap. That was looking at the major market breadth, major index market breadth using Q global market breadth, where we can see the internal health of Dow Jones Industrials, Russell 2000, Nasdaq 100, S&P 1500 and S&P 500. I explained in the previous recap that, let's look back again. Dow Jones Industrials was hitting the upper extreme threshold, overbought threshold for percentage of stocks above 50-day MA. Nasdaq 100 did the same, S&P 500, so 1500, S&P all hit the overbought threshold. Russell 2000 did not. If we look at 3-month new high low, Dow Jones Industrials, Nasdaq 100, S&P 1500, S&P all hit the upper extreme overbought threshold. Russell 2000 did not in this period at least. And what I mentioned in the previous week, that when it did not hit the overbought level but the others hit, there were two ways of looking at it. One is that it will also get overbought, hit the upper threshold, or that it is weaker than the other indexes and it will continue to remain weaker, and I don't expect it to go up, I expect it to come down. And I also explained explicitly in the previous recap before knowing the results that I subscribe to the view that small caps will come down, and that was because of the charts in weekly daily. It was near resistance and it did not go up. My analysis of previous week worked beautifully, meaning profitably. Now, did IWM give a short setup? No, because IWM itself had trendline support nearby. Q techniques do not allow me to short. So I did not short IWM. Would never short anything where I have trendline support nearby. That is the Q guidelines. I follow that. But see, my analysis of previous week that as a previous market recap worked beautifully. Now we have a bear release. We are still not at jump thrust high, near jump thrust high. We don't have any big move down 3. So once again, that explains why I did not try to short IWM either. I chose QQQ. All these are working, rather displaying on multiple monitors. I'm watching them every day. I see the progression from one week to another week, and I'm able to, I think it's fair to say I'm able to have very accurate preferred trading direction. And that comes from few other things also. Let me show the other thing that helped me to have bearish trades probably well before others. This is a snapshot from QFinder technical breadth weekly interval. This is actually from live YouTube. You might have observed it, watched that video. It is of 2 weeks ago. 2 weeks ago, 23rd July. In that session, I shared as it appeared the headwind alert in technical breadth weekly picture. And I always say whenever we have this headwind alert in the weekly interval, be cautious about buying. That was 2 weeks ago. In the previous market recap, I showed, notice the percentage of bullish setups versus bearish setups. When we look at the all quadrant, it was still bullish. What does it say? It says that this headwind is a reversal signal, and we of course see on the charts also it is a reversal signal. So market was still very bullish in terms of technical breadth, but the headwind alert, it is not a single stock that was giving the alert, it was an aggregate technical break that was telling us to be cautious. This is 2 weeks ago. What happened 1 week ago is this. This is a snapshot I shared in the previous market recap. So from 23rd July, it came to 30th July. See how from the, let's go back, from 68% of bullish technical breadth overall, it came down to only 52. Effectively, it became neutral 1 week ago. So once again, if you use the technical breadth bearish headwind alert 2 weeks ago, you would start to be cautious. And again, going back to that period, I shared only buying ideas if the stocks had very high dividend yield, and I explained those could be bought with the thought that I would hold those stocks for dividend in case we got assigned. The expiry has not come yet, but that was the premise. Then it became neutral. So the bearish headwind worked beautifully. And how is technical breadth this week? We'll find something interesting. Remember, let's look back again. From 68% overall bullish technical breadth 2 weeks ago, when we had the bearish headwind alert, it came down to 68 to 52%, right? And what about this week? Let's find out from this week's technical breadth. From very bullish, almost 78% to mixed to now we have 85% bearish technical breadth, and on top of that we have huge, unbelievably huge. This I have not seen for a long time. Very, sorry, that's not that percentage. This is not huge. This is usual. Sorry about that. Got carried away. Not huge. It is very bearish in terms of technical breadth, and we have in addition the headwind alert again. That is making my view of the market more bearish. And if we look at Friday's picture, it is also bearish. This is the daily technical breadth that is also bearish, not only for the all quadrant but across all the categories: strength, reversal, continuation, everything is bearish. So technical breadth is telling me to be bearish. External view told me to be bearish. Let's look at the internal view. External view was through the ETFs. Let's look at the internal view, internal health check from USA market breadth total view. Percentage of stocks above 50 MA came very close to the upper extreme threshold. It did not hit that, probably because IWM did not go there, Russell 2000 did not go there. 3-month new high low hit the upper extreme here, but approached that. But more importantly, I explained in previous market recaps, and see, all these are in my mind that I observed these patterns. We had irrational exuberance from the Bango signal, thanks to Mr. Ian Woodward, may him rest in peace. Then we had the Hindenburg alert. It's not confirmed Hindenburg that will come in magenta color if it comes, but those were alert signals. We were seeing alert signals from multiple angles, isn't it? Using all the Q systems. And after that came the Phoenix signal. That was also leading me to have a bearish view. But one thing is conspicuously absent from this chart as of today. That is, I'm a little bit, I'm going to make a say my view of the market. One thing you see is not there is a distribution count. We had Hindenburg alert, we had Phoenix signal. These are market breadth weakness signals, but we did not have a distribution count of even one. So my view of the market is still in an uptrend or going as usual for the last couple of weeks. For some market ETFs, it may be sideways. Market is not in a downtrend, but there is selling taking place. There is no heavy selling taking place across the board, because that print as distribution count that is missing. If that came, I would be more bearish, and probably I'm thinking, but it may or may not happen. Probably the distribution count will come if the trend line supports we saw in SPY and QQQ are broken. And because the distribution count is not there, I should add that also, because the distribution count is not there, I am not very bearish on the market. It can happen that market will go up, then come down again with a Hindenburg confirmation signal, and maybe distribution count will start coming from there, or market can go down from here, breaking the trend line supports in SPY QQQ, and I am expecting the distribution count to come from there. It is a bit surprising that so far we don't have a distribution count. In fact, if you look back, one distribution count is noteworthy, but it's not so bearish. We need at least two, and of course market was going up. We don't have, in fact, if you look back for a long time, we don't have an accumulation count also that is more than one. We don't have a distribution count. Of course, it was in an uptrend. We don't expect distribution counts, but notice the accumulation counts were also not large. So what does it mean? On the way up for all this period, it was silent buying, not something that would print as high accumulation count, and on the way down so far it is silent selling, not making a lot of noise in terms of heavy volume across the board, so no distribution count yet. And just notice that on the way up also we did not have large accumulation count, then probably it is okay to expect the market to come down without large distribution count. It is okay because we have precedence on the upside also. Is it very bearish? No, isn't it? It's still in an uptrend. And let's look at this candle chart. It is a custom index for the whole market. Let's look at it using the weekly daily. And we see after a long time we have a bearish backdrop. We have a bear release signal in weekly, and in daily we see a pattern that is again concerning very much, and that is again keeping my overall view bearish. This is not one market index ETF or future, this is the market as a whole for the USA, custom index for the whole market. That also hit jump thrust high at price extreme high. So far so good, but then suddenly came a big move down 3 on this day. Who was selling at the very top? Not people like me, and I doubt that they are done selling from that one day. The trend line support for the market breadth total view is far enough away for me to have a bearish view on the whole market. See how using the same color charts I am able to decide my preferred trading direction. Now we may look at one last part of the market, that is the sector industry stock breadth. From 1 month to 1 day, 1 month is still bullish, 10-day mixed, 5-day, 2-day, 1-day bearish. So this transition is also showing that it is bearish. If we look at the bucket analysis, it's neither oversold nor overbought. Something interesting happened on Friday. The percentage of stocks above upper boundary went up. Percentage of stocks at below upper boundary went up by a much bigger percentage. So yes, though this overall bar chart is mixed up down zigzag, if we look at the stocks at the lower end of the Bollinger Bands and upper end of the Bollinger Band, both categories went up in terms of percentages of stocks in those buckets, but the weakness is more prominent. And if we see the percentage of stocks above mid Bollinger Band, it is mixed. Yes, it is mixed, but relative to what it was 1 week ago, it is much weaker now. Overall, it is slightly bearish. Earlier, it was much more bullish. So yes, it is still mixed, but it is coming down from very much strength position that is making my view bearish. Now, with that view, I shared some bearish ideas, and I think they are on Twitter, at least some of them. Yes, this one. This is on the housing ETF XHB, and I shared it on 3rd August on X. Twitter is now X. On X, I shared on August 3 XHB as a bearish candidate, possible bearish candidate, and notice that pattern that did not come yet. Jump thrust high, price extreme high, starting to come out of Q squeeze, came a bearish headwind, but the candle shape was indecisive, and this I am posting in the morning session. Notice that all are live before knowing the results. This trade is still on. 10:20 a.m. morning session. I am watching the live charts, and I saw the momentum change to red. It did not change to magenta yet, but if it did change to magenta by the close of the day, then we would have, and that is why I shared the chart beforehand, we would have a bearish headwind with bearish flow. And as I always say, if the bearish headwind setup is not available, and in this case the bearish headwind setup was not available because the candle shape was indecisive, we could take the short at the bearish flow candle. And I'm sharing again this in the morning session. The flow did not turn bearish. That would have a tick on the top of the chart. So let's see how XHP closed on that day, August 3rd. XHB housing, sorry, not housing, home builders ETF. Let's look at it using weekly daily. This was 3rd August. I shared my tweet in the morning session, and notice what came by the close, the tick symbol, that is bearish flow, and the color turned magenta. So we indeed end up having a day with bearish flow right after bearish headwind, and the risk is small because my stop would be just above the recent high. So that gave me a day to short XHP, and I did short XHP. I also looked at some other overbought signals. I also looked at the home building stocks on QH, Q Vital, how they were moving. I took a short position on XHP, and because it is shorting the very top, it's clearly still in an uptrend. I used naked puts. I have a small profit. I used intraday charts to short it in the morning session, as you have noticed on Thursday. So I have a very small profit on Friday, very small. That was a live tweet, and I think there is another live tweet. Yes, CCL, Carnival. This I posted again. It's like coming into my live trading room. I shared it just before the close on Friday. All the analysis I shared earlier, I already had access to them. So my market view was turning bearish. I was ready to take short trades, and I was looking for a proper technical short setup in a weak fundamental stock in weak industry. And this is CCL. At the very top, if I'm shorting, I am willing to ignore the fundamental criteria. I'm not sure if I did that. Let's look at CCL, generate the scorecard live, and while it is generating the scorecard, let us look at my analysis just before the market close. See, the same pattern is playing out. In the weekly, we have a bearish backdrop after a long time. The last bearish backdrop was right at the bottom. Now we have the first bearish backdrop at the very top. That is the most lucrative place to short, especially with naked puts, if we have proper trade setup. So we had the first bearish backdrop after a long time. We can see it was moving sideways for a week, for a couple of weeks. What did we have in the daily in the meantime? Again, that pattern. You see that pattern playing out over and over in the USA market as well as global markets, and even in the market breadth total view. We had jump thrust high at price extreme high. So price was jumping up with acceleration when it was already at a very high level. Then somebody sold heavily. Yes, price did go up, but since the time this pattern came, I am looking for a short setup. But I did not have a short setup so far except on Friday. I have a proper breakdown short setup in CCL, that is Carnival. And I looked at its fundamentals. Let's look at its industry score also from QH, and I am beyond 1 hour into this session, but that is probably fine. Now, on Friday, this is not the weakest of the sectors. In fact, on Friday, some sectors were up. This industry was in fact up on Friday, but it is weakening, and we have deceleration over 5 days shown by the pace column. So it is not one of the weakest industries, and that is probably in sync with the chart that I shorted. Not this chart, here on Twitter. This stock is still in an uptrend, just breaking down. So the industry is also weakening over 5 days. Deceleration shows that not very weak, and fundamentals I can see medium valuation, actually high earnings growth. So fundamentals not very weak, but there is no fund accumulation. Funds stopped accumulating this stock. It is at the very top, and I shorted CCL right near the market close with again naked put. Near the market, sorry, no, not near the market close. In fact, I shorted when it was breaking below the trend line support, when I found it using Finder, and I shorted it. I have a small profit in the naked put. Those are few of the trades I am holding. As I explained, all of them are in the bearish direction. QQQ shared publicly before knowing the results today. Okay, no, sorry, QQQ I have 50% profit already. That was an intraday trade. And CCL and XHB, both I am holding with small profits. I will see how they go. Now market is bearish. Let's see how the market moves next week. If it continues to go down, and if it hits the supports in SPY QQQ and stops there, then I will book profit in my short positions. If it hits the daily support in SPY, weekly is broken, but daily has a trend line support. Weekly trend line support is broken, but daily has a trend. If this support holds, I am going to book profit, or at least protect the profit in my existing short position. Those are using naked puts, all of them, QQQ, XHB, and CCL. Naked put profits can erode quickly if the stock and the market goes up, so I will not let that happen. But if this trend line support and the equivalent one in QQQ, if they are broken, I am happy to continue to hold at least a few of the put lots. There is no buy signal anywhere across all the Q systems, so I am not going to look for buy setups now. I am already beyond 1 hour point. I will not try to find any more trade setup today. I explained exactly how I found the trades and even more importantly, how I decided my overall market directional preference and also why and how exactly I shorted QQQ. Let me end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Most likely it will be next weekend. I'll announce the date and time as usual on X. If you are subscribing to YouTube, you will probably get notification from there also. As these live examples show week after week, month after month that I share before knowing the results, as I always say, there is no reason not to make some profit in the market. I hope you do that, whatever be the market condition, be it up market, be it rolling over like it is now, be it sideways, or be it down market. Trade profitably. See you again and thank you.